Yeah. What's up, guys? We're not professionals at streaming and content production, but there's the intro. Hopefully, you guys are all well, surviving the drop. Max has already got up his chart, which certainly appreciate that. Does that mean you wanted to lead us off with something, Max? It means you have something to talk about.
I was going to let you go.
No, yeah. So what we're going to talk about is we're going to do a little bit of a recap. We're going to recover, what we had said back on the 17th. We haven't actually done an update in a while. So, I've kind of alluded to it on my Twitter. I've told you guys that I don't put out a lot of content anymore. Back before my first channel was lost, I used to put out content every day because I was just trying to grow the channel as fast as possible. So I'm not really trying to do that anymore. I want to enjoy time with my kids, my family, and I do spend time in the group as well, just shit posting and posting charts. So I really just got to zoom in on my face there, huh? Now they can all see that the gray hair coming in. That's why I don't produce as much content. But when I do, I try to give you guys the most important thesis of what we're looking at, right? So these are the high time frames and why I'm thinking that way. And you guys are more than welcome to disagree with me. It's just when it comes to time analysis, it really just hasn't panned out well for those that are that do disagree. Like one of my favorite is, his name's Jason Pizzino, and I actually like the guy. I think his content's really good, but he keeps saying like you're home for macro time analysis. And I keep saying like no one's been more accurate from a timing standpoint than me since 2021. Not a single person. So I've called every top and bottom almost to the day. And this one was more of a window. But when the top came in, I did post it on Twitter for you guys to let you know that the top was probably in and that these are our targets. And that's where the 17th came in as well, to go over this pattern specifically that we've been looking at. So very, very simple. This was our window of time right here. Okay. And that is derived from 3 pulls of Fibonacci time. So I'm not only going to tell you guys why, but I'm going to show you how we got to this level, right? So when we look at the prior COVID low to our all-time high, which this is the true all-time high, there's a lot of people out there that say this is the real all-time high because of the, whatever that indicator is that gave us a sell signal, but it was 6 months off, and it was 6 months off on the bottom as well. So that was curve fit data for that. I can't remember what it's called. There's a couple big channels that really push it, but it's an indicator that was curve fit data, meaning that they didn't actually make the indicator off of previous. They made the indicator off of previous data, meaning that they fit the data to work to previous data, assuming that new data would be in line with it. That's why it doesn't work, and it's only going to get worse, in my opinion. So that said, you come into the 1-to-1 right here. Okay. Now, after that, we just look and say, how long did we go down in 2022? Out of all of 2022, how long did it take us to expand to the downside from our overall 2022 high, which came in fairly early in March, to the low, which came in November, right? You can see we've got another data point right here. And then lastly, you have this one here, and that is just your all-time high to your current low. So we're just measuring how long does it take for volatility to expand in the opposite direction once we have a confirmed bottom or top. That way we can start gauging things, because markets are very symmetrical. I was trying to explain. Yeah, pi cycle. There it is. Pi cycle. It's curve fit. That's the one. Pi cycle. I don't put any weight on that indicator. I think it's only going to get worse over time. So the reason you want time analysis and you want these symmetrical moves is because there's a lot of people that say, well, the Elliott wave, everything like links together. It's not really like that. Dow Jones has the theory of the 50% retracement. So that's not a Fibonacci level. What that is a, an equilibrium, so to speak. Markets are very symmetrical, and it often operates like a rubber band. It takes the same amount of time to pull it apart as it does to retract. So when you get to that 50% mark, it's very, very important. That's where the Dow 50% comes from, in my opinion. Well, not my opinion. That's how it's done. So that's why time analysis based on a 1-to-1 nature is important. And we can look at this over and over again, and see that. And I believe I even have it on. the BLX. And so this might be a little bit of a lengthy video, but you guys will be okay. So this is a Genesis poll that I made for the group back in 2020. So we're going way back in time here. And let's go to log. And we'll get that to auto. So basically calling the low. This is your 2019 China pump, 40+% in the day. This was your breakout for new all-time highs. This was when things started to slow down at the top, the very top. And these are all things we called in January. Looking for this to be a giant range. That video is still up, looking for a big range. And then from there, you're just still expanding because this is all of Bitcoin's price action up to the last 2020 high right here. Or 20K high, excuse me. And so you can see right here, we had another time point, just the 0.75 in this instance, because that's the midway point between the 0.5 and the 1, which the 1 doesn't come in until May 2025. So that's why this little, area on the chart has been so important to me in terms of a time perspective. Not only did it have local volatility in there, it had high time frames top to bottom and bottom to top, all coming in this region, letting us know that we're at a major inflection point in time. And then when you look at this, just as basic as possible, you can start looking at this from like a weekly perspective, and you can flat see where the resistance is. It doesn't take an expert chartist to just be like, man, this is huge resistance. And as we slide it over, what do you notice? So we have time, we have massive resistance here from prior consolidation. The kicker was you needed a setup. We always say we can't blindly trade levels. You needed a setup, and you got your high time frame setup with the shark pattern. Okay, so this is what you wanted to see. When you got this, it came in at a perfect 1-to-1. And what I mean by that is the X to the B leg, so the first half of this reversal pattern, which is predicated off of what? It's predicated off of swing failure pattern of the low, swing failure pattern of the high, right? So those are the two best trades out there, are the swing fails, high or low, or the best trade. It's only one trade, but different circumstances. Same exact time it took us to get to that second swing fail. So really symmetrical pattern at macro resistance inside of macro time. Now we look at what are going to be the targets for this, and the targets were pretty simple. Given that this is a shark, the most important leg is the 50%. And the reason it is because when you make one of these, usually they form something like this, right? And this is more of a pattern type of thing here, but you're looking at it as like an expanding cylinder, right? Because you have a new high and a new low. You don't really have any trend coming in right now. Inside of this, it's very sideways, but it's an expanding range essentially, letting you know that things are going to get volatile. And the 50% mark is always the most important mark anytime you have a cylinder like this that's formed. Once you lose the 50% mark, you target the 886, which I use the 818 as a pocket. Blew through that, but your next target is the 113% retrace. It's specific to this pattern because you're looking to take these lows here, right? So you've successfully done that. You've actually swung failed them on the daily. So if you were being uber conservative, you could always just say, as long as we're holding 24/7, things look good. Things are fine, right? 24/7, which is the Q3 pivot. As long as things are holding up there, we don't have anything to worry about in theory, right? Right here. Nope, it's the Q2 pivot. Excuse me. I went too far with my my quarters. The Q2 pivot. I don't know if I have it on this one. This is again my streaming like chart setup, so I usually don't have everything where it should be, but 24/7 is where it's at. You want to hang on to this level essentially 24/7. You don't want to see us living below it. If you do, I think that you'll see the next target, which is the 1618, and that is actually the gap fill. So there's a lot of people looking for the gap, and that's going to be what your trigger is for that gap, for said gap, essentially. Now, in terms of higher time frame stuff, right? Oh, this is the Bitstamp chart. We'll go back to Bybit. In terms of your higher time frame stuff, You know, there's a really important low that came in. We talked about it in the group a little bit already, and that's the April low. And so when we go to the monthly chart, you guys can see that about 26,925 is the last swing fail that we swung fail in May and in June. And now we've revisited this level and currently living below it. So you really want to see by the end of August here, we're living above $27,000. Things start to look a little different. You've also held the yearly and 6-month pivot, which are, you know, good things to hold on to. And, you know, you could potentially say that the bottom could be in at that time, you know, in terms of like this downshift. However, if we're looking at things from a macro time frame, which I don't think this is the right one, I think it is going to be this guy. Get rid of this and some of this shit on here. Just clear it all the way out. We have a macro pattern as well that you can see on the monthly. Okay, another harmonic. I know you guys probably, if you're not into harmonics, you probably hate this, but if you are into harmonics, well, you know, it is what it is. Another Fibonacci based time giving us the 150% mark of that macro pattern. And I've got a folder for this one. I made the folder. I know I made it. So it's in here somewhere. Or it's not. It doesn't matter. Your pattern is this. Okay, so what we're looking at is we're doing this. And again, very similar to what we were just looking at. And I actually don't like these as much. This is what's called a cipher. It's like the predicate. It comes right before a shark. Scott Carney doesn't actually recognize it as a harmonic from my knowledge, mainly because the statistics just don't add up for him. But to me, you know, it's valid enough to look at because symmetrical as always, right? So we're looking at the 1-to-1. It almost came in perfectly on time with the bottom. And that is, again, the exact same thing we did before. We're just measuring the impulse length from X to A, and we're expanding on C to see how long this is going to take to come down. And you have almost an identical move from the upside to the downside. Okay, so that's always good to see. You want to see that. So you're now looking at this as the 150% projection of that same analysis we just did off of that. So you had time here, even on the monthly, and the next timing point's not coming until January. So January could be like last year, could be a bottoming area if it doesn't pick itself up here. So things aren't really broken yet. So don't get like too bearish. You know, we're still living above this like 24/7 level that we need to see hold, but it's not a good look, you know, just not a good look at all. If you go out to the daily, I believe for the RSI guys here, another, you know, thing is this thing is quite oversold, and you finally come back to this trend line that you set in all the way back here in 2020. You can see that there's only a few touches on it, right? 1, 2, you count that one, 3, and you're now living below it. So you really do want to see this thing recover this. And if it does, we're going to be looking for that move back to the upside. And it doesn't mean that we're going to make a new high, but what it does mean is that we could be putting in a larger structure, something like this that we had over here, right? You had some pretty big volatility off of this where you didn't make new highs, but it continued to go sideways before dumping. So that can certainly still happen. You know, we can see this go sideways up here longer, which nobody wants to hear, but you know, it is what it is. You do have a gap. We talked about this earlier. We have to be aware of the gap. You lose 24/7 and you're probably going to the 20K gap. Gap boys. I'm going to have to clear this one out like I did my other ones. My other ones are all nice and tidy now. This one is not. We'll go back to this one here. So you have a gap that's coming in about 20,004 and some change. I believe I actually put that in my SR boxes right here. There's one there, and you have one other gap beneath us. Man, just dropping the ball. But it does come in off the 1618, essentially 20,400, give or take, which is all the way back down here into this region, which is the yearly pivot for 2021. So if you're watching this, you want to see 26,925 recovered, especially by the end of August, and living above that level. If we come back down to the downside, which I do think we'll revisit, you know, this area, you know, this wick, especially living below 27K right now. Yeah, I mean, 24/7 has to hold. You can see it right here. If we extend this over, it's a pretty important little area, right? On a weekly time frame, especially. So keep that in mind. That's why we're using that high time frame closure still as kind of the barometer for things aren't looking good. Otherwise, this begins to look like what? You're going to see it all over social media. It's going to look like this to people. They're going to be calling for a head and shoulders. Okay. They're going to be calling for this, and they're going to all be targeting $15,000. That's what you're going to see it everywhere. I don't think that we can really make that call right now. I don't think that's appropriate, to be quite upfront with you. So, however, there's going to be people that want to, live and die by these bold calls, and let them do so. So for me, I think that the bottom is in most likely, and if it's not in, we're probably going into a much larger recession, and we're not going to see all-time highs for quite some time. And that would be more in line with like a bubble pop. I think there's a couple, really well-renowned analysts out there. I know Gareth's always on that train of, we could be heading into, some territory where it's, we don't see all-time highs for quite some time, and that will affect cryptocurrency just because there is that correlation to the market. So nothing is broken just yet. 24/7 though, anything below that, I think that you've got to be looking, obviously you want to go level to level if you're trading it, but that gap fill around 20K is just got to be on your mind. Another thing brought up in the group, that's why Dow's theory was so relevant on the brain, was somebody had brought this up, that, are we in log? Get out of log. This is a perfect 50% retrace of our overall low to the high. So you've essentially hit the EQ. And now you could even just start looking at this in terms of a range. You could say this is all one big range at this point. Everything below the gap on over. And you can see that our point of control is down here, and that unless we're living above 27K and then the Q3 pivot, you can see that right there. You're still living inside of that large volume profile. Now it's pretty big. So for me, when I look at something like that, I don't necessarily see not validity, but it's easy to fall in love with this idea, but it's a lot of data. And so you still have to be willing to dive into the low time frames and analyze those to see what's going on. So hopefully that makes sense. It's a lot of info. We haven't really gone over it. My next time point is going to be in January. So maybe we get a bottom there like we did in 2021 and 2022. I think we had bottoms in January. So it seems to be one of those things where it could be relevant in terms of your gold pocket coming in just above the gap, right? So the gap, and I'm just going to pull it up on the chart. Yeah, the gap is 21,110 to 20,330. So because it's a CME chart, all the way down here, right? Where's that at? That's the gold pocket. You can see it right here. So that would be where you're looking at, and that's all around what that 2021 yearly pivot we were just talking about. So if you're looking for next targets, you need to see 24/7 loss before we can look for this. But if we do, that's a pretty sizable move from 24K all the way down to like this 21K region. And this is a big box, but I would expect that you're going to fill that gap. And at a minimum, I would be targeting probably the EQ of it. So I would expect to go through the gold pocket into this region of the chart at that time. Doesn't mean I won't trade a really nice reaction off the gold pocket or sit tight, but this would be my target, my initial target. And then that really does kind of like, if you lose this gap in this 20K, all the guys calling for 15K and a retest of the lows and maybe new lows after that, they're going to get what they want probably, because below this, there is nothing. You can see that right here. Now, just like our all-time high, by the way, this is one thing I wanted to touch on. I think Max can elaborate on this as well. You had a very similar structure. You actually had a butterfly that came in here from over here. It was a really nice butterfly called out by Urska in the group. And when this took place, everybody wanted to get in on a short, but price really never let them. It just continued to drop. And this drop really does remind me of this right here. This is what it reminds me of. Really big drop into a quarterly key level, which what we just did. In this case, it was Q4 from this, consolidation. And you put in a big bounce. And this was actually the first trade I gave the group when I joined up with CVO, was this short trade right here. You had the Q2 pivot just above it. You got the short trade, took that, rode it all the way down to about 46K. I think it was 46,211 was the target at the time, because that was like a 4-hour swing fail pattern that we'd found, like a breaker level. And then the price continued and went on to our targets here at the July NPOC and the 1618 expansion for like some trend based stuff. Like there's a lot that was there. So when you're looking at something like this, if this trend is going to continue, you have to be expecting a bounce. You just put in a local high here at the April low, as you can see. So again, this is why it's such a key level. If this starts putting in a range, just let the dust settle and take a good trade. You're going to get either a swing fail of something up here, or you're going to get a swing fail of something down below potentially. I would be waiting for those opportunities if I were you guys. This isn't a time just to be like, well, I buy on red days, unless that's literally your strategy. If you're trading, it doesn't work. You don't just buy on red days if you're trading. But if you're investing and that's your strategy, well, you just got a big red day. So hopefully, you're at least taking somewhat advantage of that. However, I'm going to let the dust settle a little bit and wait for a good trade setup before I start putting capital into this section of the chart, because I want to see a range. And if I don't get a range, then it means we're getting continuation, and I know where I'm looking to the downside in that instance, right? So that's just how I'm viewing it. It was a really long-winded answer, 21 minutes. 23 of you in here, I'm surprised. But if you guys haven't hit the likes, Max has already been kind enough to put this up. I know he's probably bored out of his mind over there, but we do offer a free 7 days. It gets you access to all the educational material. That's the most important part, but also that's how you'll get Discord access. The only reason I've taken the Discord link off of my YouTube channel is because we get so many bots and spams, because I have an open link to the Discord just on my YouTube. So the amount of spam that we get that comes in is pretty obnoxious. So I just wanted to hedge that. So you have to actually go to the website if you want to get in the Discord. Other than that, that's my one shill for the day. I've got a shill zone in the description where it's just like tools that support the channel. So it's real high time frame. My recommendation, guys, be patient. Max is obviously looking for a day trade because it's what he does. And I'm going to let him cover that type of stuff, especially with the order flow that went through. But, one thing to note is we got a drop just like we did before. What's the one thing that you guys notice about this drop and this top and this drop and this top? And I want to leave you with this, is that when you get those reversal patterns on key fib times, because this was a key fib time, what did you notice? Why did it drop so quickly? Because these guys are aggressive buying up near the highs probably. You've got people that are trapped that now want to get out of these positions, and price is not going to be kind enough to let them out. They're going to punish these people, and that's why you get these big drops, because that's what's happening. So the exact same thing happened over here, right? And, Max can explain this better than I can because this is where he lives. But, same thing. Really big pattern to the upside. Very aggressive candle that day. We were both live for it. And Max even pretty much called it and was like, this might be a really good short. And then as soon as we gave up the local high here, the Q2 high or the 31K high, it got nasty, and it never gave people a chance to come back to the range highs and get out of it. We were looking for like 29.7 here, just like on the retrace the other day. Couldn't even hit that. These are like day trade ideas, but you had to be longing this as support. But once that support gave, is pretty much gone. And if you go to your 6 month, these are tools that we use in the group. This is your 6M1 regression, meaning that this is the trend for the first 6 months of price. If you just traded this alone, once it broke down, you were, you knew where you were targeting. You were targeting at least 26K at that point. The gold pocket was above this at 27,210. We had it marked as a speed bump, but we're also on record saying we didn't really think that would be the bottom. If we did break down, we thought we'd probably go lower. If the trade was there, you take it. The trade just never presented itself. So, and it was so fast. I don't know. I don't know who's trading that quickly. They're making some poor decisions probably and getting stopped out quite a bit if that's the case. But yeah, so just be patient, guys. Let it come to you. I'll try to be a little more public in the coming weeks with Max. We've kind of talked about it behind the scene. So yeah, Max, do your thing, or I'll just keep talking.
It's a pleasure to hear you. Yeah, so move was, really, really big, really fast, really, for me, a pain in the arse for the timing. But when you have all the alerts that I have, you get up for them. So, yeah, the move was good. The move was big, very fast, had a big open interest drop. You had all your reversal signals that one looks for. You had the huge open interest drop. It really was huge, far bigger than anything we've seen as of late. I've got this line on the chart here, and it's just to kind of, I'll go to the daily just to show you how much open interest we actually took out of the market. Like effectively all of these traders in this zone, from here to here, one could look at them and say that they're effectively not in the market anymore. Like it's such a big drop that you can pretty much guarantee no positions up here are still in the market, and it's all in one day as well. But the thing that's really interesting from this low, I need to go to a lower time frame to go over it. In fact, we can go over to XO while TradingView shits the bed. Is the fact that, and I need to hide the rect because it's been a lot. And hide that because it's unnecessary. The fact we've had open interest just continue to decrease after the low is made. It's not been this wasn't a bullish move up straight away. The only way one could have traded this is either the SFPs, you had that 0.5 that Magic showed you on the chart, or you're trading simple low time frame market structure, which enabled me to get into a trade. I got in about here and then jumped out a touch later. I've just kept moving my stop loss up, and it caught me out back here. Because with such a move up, you can expect a pullback. And where can you expect to pull back to? Well, basic stuff is the gold pocket, and it really does line up quite nicely with some of the things that we've got. But yeah, as you can see, the open interest for this move and for all of today's price action has just been complete ass. It's just been going straight down. The open interest is continuing to go down, and it just means that all of this area is just people getting out of positions. There's going to be a lot of people on the sidelines, kind of just really scared right now, and it makes perfect sense. But it's not been bullish market structure since the drop. I think TradingView might have not shit the bed anymore. Okay, we're back. We hide this one because it's irrelevant. It's just the New York highs and lows, and we keep this one on. But you can see that we've not been making bullish market structure even the low time frame. We had this high here. It still wasn't a higher high. And have we made a higher low? One could argue this, but I think right now the way that I'm looking at price action is probably going to come down and take that. And the reason for that is, we've got this here, and if I put the day-to-day stuff on, we've got a gold pocket down in there as well. So I think it's a very high likelihood that we come down and test this region. On the hourly, on the 5 minute, you've got PVAs right down to the bottom. On the hourly, you've got a PVA, I think, right down to here. Let's check. The PVA was closed out earlier today. I chat shit. Hourly PVA was closed out earlier today. 30 minute, 50 minute, I think, is down. Oh yeah, much down where that 5 minute one is. So PVAs and all these high volume candles, they do typically like to get filled. And we didn't get the chance to go up and close this one, but we can leave that for another day. But while we are not making any bullish moves, there's no real good open interest coming in as we move up. It's just all people getting out of trades. So for me, looking at this, someone asked in the group yesterday, I think it was OC Pat, what's the statistical chance that we come down and take the lows? And I don't have anything that could, warrant say, 80% we're going to hit the lows. I don't have anything like that. But the way that price is just mulling around here, open interest is just non-existent. It's just completely dying. The likelihood is that it has to come down to find buyers. If we don't come down and find interest in price, it's going to continue to go. And I think this is a good region to look for interest down here. And it's still a really big move. So can we get into a trade in order to profit from that? For sure, but I wouldn't get into a short right now. You've had such a big move and you are at the lows for the day. So it's really not a good idea to do that. You kind of want to wait for something like this, which we had earlier. So these are market order bubbles. Leviathan's brought out an indicator which puts market order bubbles on the chart. And it just means it's effectively you're looking at stop losses and people aggressively closing out trades, and it's quite a large amount. So you can see that it's normally a good time to buy and sell when you have these order balls pop onto your chart. It's effectively the liquidations that you have on XO. So if I pop rec back on, you're getting a lot of liquidations up here, you're getting a lot of liquidations down here. Typically good times to think about flipping into getting into a trade, but you're not going to just jump in because you're getting them. But here you had an SFP. You also rejected from the initial balance. It's SFP of what was the London high initially, but obviously this was still in the London session. But you got all that, all those liquidations, all those market orders, and you were still on decreasing open interest. So you knew that the move up was weak. Had a big open interest drop here, reversal signal as you bounced from that hourly PVA. And then as you come up, still decreasing, weak move up, typical open interest and trend analysis, have an SFP, getting all these liquidations up there. And you can just take that trade. Right now, I wouldn't get into that one. You can look for, right now I'm looking for that gold pocket. If it's going to come up and tap that gold pocket that we've got there, and one can trade it as an SFP if you really want, because it's not a really tight stop loss to put your stop loss above here. But for me, I'd be looking at this gold pocket if offered, but I don't think it's going to be offered right now, to be honest with you. I think it's going to come down a touch more. And I think it's going to come down to here, but there's just not any data in here that we can really look at and say, I think it's going to come here. You have to do really basic stuff, which involves pulling things such as your gold pockets and looking at your levels. I think I've got some levels on here. You've got a weekly there, but it's been washed. Daily there has been washed. You've not really got anything of real significance that we can look at and say, okay, this is really important level to hold until you get down to here. It's kind of just all hollow price action, because it says here that the open interest did spike. I actually don't believe it did. Looking at the Binance data, I think it's just an error with the indicator. And I'm looking at this as going to be hollow area. I mean, it's not a single print. Is it a single print? Is it a single print? Let me have a look, actually. It actually could be a single print. Bear with this. Very well could be. Or maybe a buying tail. That's a buying tail. Okay. Oh, this is interesting. I've not looked at TPO in a while because we are so range bound and not doing any moves. We've got I didn't look at it, but yeah, we've got some big single prints. Oh, Danny did show this yesterday, but yeah, this buying tail is regions you don't really want to break into, because if you start breaking back into it, chances are you're going to go and close it. But I think that it's just all going to be hollow, so one really has to be aware of that. But yeah, I don't really have anything on Bitcoin. The low's really good. You've had everything that you want to see: volume spike, open interest decrease, and a very volatile move off it. If you go back and look at on the daily and look at all the major lows that we've had, you typically have those things: an open interest drop, a volume spike, and a big wick. And we did have a big wick. We closed out the price action up here. Huge wick on the daily time frame. So could it be a low? Yes, but typically with what we've had here, you do always come back and try and test some of the regions as well. So for me, patience on the longs until you get some really good buy signals. You can always scalp SFPs, but really patience until it comes down here. And I do think it's going to. So yeah, not really much on Bitcoin. And then all of the shit coins, some of them are having good moves, but they're all pretty much in line. You're not having any crazy ones. So for me, looking at the strategy that I trade shitcoins with, which is look for SFPs in line with an open interest trend. Right here, ING is probably the only one I really would look at, because it's the highest mover that I've got on my little list here to look at. And even then, this has just popped up actually. But even then, where are you gonna look to get in? Maybe around here, but I'm not too sure. I think with the way that Bitcoin's moving, a lot of these coins do follow Bitcoin. It all happened at the same time last night. As soon as Bitcoin dropped, they all followed. And with me being rather cautious with Bitcoin, I think it very well could. You've got to be very careful with your positions that you're taking now, especially long. I want to say that, especially long, because there is a very high chance we do come down. But I'm repeating myself. I'm done. interesting how low on Bitcoin varies on exchanges. Really have to draw your own fibs for what you trade. Yeah, you do, because they all have different liquidity. So I know Bybit, actually, if I look at Binance here and go back to here, we can zoom into the low. You can see that when you came down, you had got quite a few areas where you had well, it's not really finished auctions because it's in the candle, but even on the initial candle down, you just had so many. Look at here. This is Binance data, which is the biggest provider, and you've got a whole candle here where there was just literally nothing in the candle. So it's all about liquidity and how many people are trading on those exchanges, because there'll be bots who's put bots on which exchange and what have you. But to see this on Binance, which is the largest provider, I know Jens, he will vouch, and Twin actually, it's very rare on Binance that you see so many finished auctions, and you've got a ton. And this is such a big, this is the biggest one. So Bybit will be different. They'll all be different. So yeah, you do have to trade on your exchange, but if you can look at some of the bigger exchanges, I don't know what exchange you are on. Actually, Pat, I think you're on Mexi. I'm not sure what that one looks like, but it's not one of the big ones from what I gather. But you've just got to be very cautious because they can all be different. But yeah, for me, low's really good. Is it going to not get taken? You can't really say that. It very easily could. But yeah, right now I don't want to say, it's going to come to the low, because I'm going to wait for that gold pocket for any major longs. But yeah, pretty much done on this. Got no shit coins to talk about. They all look the same. Everything looks the same as Bitcoin to me. So
yeah, we're going to talk SPX, DXY, and then I've got a slew of altcoins listed. I'm actually working on an altcoin thumbnail in the background right now, because Max wants to go for a run. I don't know if you guys know this, but Max is he's gained some weight and he's trying to lose it, so he's running a marathon.
I did not gain weight. I've just got into the London Marathon.
Yeah, he's going. I think he's doing it with for like charity or something. So
I am.
Yeah, so I think it's Weight Watchers or something like that. He's like their spokesperson because he's lost so much weight. So
it's actually back pain.
It's what?
It's back pain. It was the only charity that I could get in with.
Oh, back pain?
Back pain. I was like, yeah, I've got back pain. I'll take that one.
Okay, yeah, you look like you got some scoliosis in you for sure.
You get that when you're taller than 5'6", mate.
Wouldn't know about that. Wouldn't know about that. But yeah, so we'll talk SPX and DXY. I may just do a separate altcoin stream since Max is gonna want to get out of here and do his thing. Because I know he's got. I don't know how long you're running today, but he did postpone his run to make sure that we went live. When I messaged him this morning saying, "Hey, it's time to go live again." Last time we went live, we kind of, we set everyone up for something like this and let them know the direction was likely changing to the downside. And now we need to cover the charts. And, as Max said, this is a good low. Like I said, nothing is broken yet. You could spend more time up here and get quite a good retracement. And what you need to see is 27,000. And then you need to see 28,893. Those are the levels for me at the moment. I'm going to look at the DXY and SPX. And then what I'll probably do is just put together a separate stream for altcoins, because we've got a lot to talk about. We're going to talk about QNT, HBAR, XRP, Chainlink, Polkadot, Solana. There's a lot there. So we'll discuss all those together. Probably won't look at costs, but I might, if we have time. And another one is KDA, because I fucking crushed KDA publicly in November and told people it was going to go to 42 cents, maybe even as low as 34. 9 months later, I've updated that chart many, many times and said nothing has changed. We're still targeting that area, and we finally hit it yesterday. So I got to collect some clout from some of these people. But, so I don't just trade Bitcoin. I do a lot of high time frame trading on altcoins, and I just haven't been buying altcoins that much because it's just not been a good time. So if you see people buying altcoins and stuff, and telling you, oh, it's summer Solana, buy $25, buy $22, these guys are not trading with anything other than like a 1 week time frame in mind, in my opinion. And these are not high probability trades. You're trading against the trend at that time. So we got to look for where it really matters. So let's get into the DXY, SPX real quick, and then I'll probably hop off, finish out my thumbnail, which I'm almost done with. I just need to get a couple more logos in there. And then we'll just do a separate live. I'll just launch it right after this, and we'll go live for that one, so you guys can watch that one if you want. That way, these aren't like an hour and a half long, because it's already pretty long, and Max has got shit to do because he's more important than me. He's got a whole back pain foundation behind him right now.
It's a lot of pressure, mate. It's a lot of weight.
It's got a lot of they're all on his back, which is counterproductive, it seems like.
One thing I want to add before you flip over is those that are in Wednesday's, I think it was Wednesday's stream, can vouch. When you have, for what I was saying, I was harping on that a big move was coming. And to be honest, I did think this was it. I did think this was it. But when you have, this is why open interest in the markets, any indicator, people that tell you any other indicators, the only indicator that is of really any importance, Magic might say, you can use RSI on the daily, whatever, it doesn't matter to me. The only one indicator that one really needs to become a master of to day trade, anything, any futures markets is open interest. There's basic charts that you can go and look at that say open interest increasing with the trend means strong trend. And this trend here, I was shouting about it all Wednesday when we did like a 2-hour stream. You were downtrending very hard, and the open interest was just absolutely flooding in. And what that means is, I always say this, but we've got a few viewers in here, and it's just with such a big move, it needs nailing in. When you have open interest, which is traders coming into the market, long and short, increasing with a trend, typically, most of the time, you have a huge wash of open interest as you take out the trapped traders. So as you're coming down in price and open interest is increasing, I mean, let's just look from here to where we got these drops. 10% increase, $400 million coming in on across the markets, and we decreased in price during that time. Let's do it from here again to down there. A fucking lot. A lot. We decreased over $1,000. So what that means is in this area, we just had traders coming in long and short, but the longs were under pressure. The shorts were just laughing. They had no worries. And with all these trap traders, you're going to get big moves down like this. So if you want to learn to trade open interest, it's the only thing I would recommend. If you really, and Magic's got his ways of timing the drops, but if you want to know the direction, open interest and look for which side of the market we're trapping. And open interest really was the telling sign. I was going on about it all Wednesday on my stream that big drops coming. I thought this was it. Clearly, there's a lot more trap traders than I was expecting. But yeah, open interest. Right, I'm done, Magic. You crack on. Sorry.
Oh, you're all right. I'm just doing my thing with the logos, so I can get this live stream going after we finish up here. So, let me share my screen and we'll knock out SPX DXY, and then I'll be live in like 15 minutes after this. I left up the quote because this was a quote I posted on my Twitter because I was, just letting you guys know as soon as I found the SPX had topped out as well. Again, exact same concept, 1-to-1 in time, looking for this area. You had monthly and weekly resistance up here. There was like a little box up here at one point. I don't remember. Yeah, there it is. This was your resistance, and it really led into an old 6-month pivot from 2022. Not always going to have those up, but it's an extra confluence to know that, okay, not only do we have horizontal resistance here, we also have the a session-based average resistance. So there's a big area, and you're completing a harmonic, right? This is called a butterfly. So you had a deep crab reversal, which we called out in the summer as it was taking place, literally called the bottom on the market. Now you're watching us call the top. So, and again, now we're looking at this from this timing point. How long did this impulse take? What would be symmetrical? 150% time on the nose almost for that, meaning that this was quite the uptrend. It was very extended. So you knew that if we get into this, we shouldn't be looking to buy up here. We're not looking for all-time highs unless, the market does something we don't see. But the quote reads, he that runs against time has an antagonist not subject to casualties, by Samuel Johnson. And I heard this in the movie Prefontaine, because that's one of my favorite movies and somebody I idolized growing up. Bullish bat harmonic. I don't see one on the daily for Bitcoin. I looked last night to see if there was anything. I don't see it. But If you're in the group, post it. If not, maybe we'll look at it here in a little bit. But the SPX, looking at this, this is a big, big level. This is your Q3 pivot, another statistical target. We have not tapped it yet, so it is untapped. And we've got a lot of quarter left to tap it, about 6 weeks. And you've got the Q3 high right here, or the Q3 high from 2022, but also the start of this pattern. So you've got some things saying here, we're coming into support on the SPX and traditional markets as well, right around 43.25 to 43.19. That's going to be an area you want to see held. But just like Bitcoin, there is a 6-month average that's still untapped as well, the 6M2. So the first 6 months of the year, the average of price is then transposed to the next 6 months, and usually you revisit that. So basically what it's telling us is that, normally we would target X and B for this pattern. And in this case, we are targeting X. That's a bounce territory, just like with Bitcoin is coming into bounce territory. Need to see this level hold. If not, you're going to get a larger move down. And even though it doesn't seem like as much on this chart, these are big moves in traditional markets. This is a very ugly weekly candle, and it is what it is there. These are the targets of this pattern though, and it came in again right on time. So SPX looking for 43.25 next, and then if that's lost, realistically looking for 42.34 and 41.95 respectively, this little area of the chart. Anything below that, and you're just really starting to pull, basic fib levels or doing some volume work and looking for your next major zone that you might be interested in. However, I like to go off the pivot points on a move like this. So what I'll usually do is just figure out where's my gold pocket and where is my pivot. And I would just say C pivot right here in here. So if you lose 41.95, the yearly pivot's at the 0.5. So Dow's theory is right here. However, this gold pocket and this C leg is where I'm most interested, especially if it comes through the gold pocket and swing fails this level. If not, we take the trade if it's available, wherever it may be. So that is it there. Let's look at the DXY. This was a long setup that I was actually on about. And this was a very nice AB equals CD reversal pattern. Okay, so very symmetrical. It's a 1-to-1. So essentially what that means is you can see there's your 1. But what you're doing here is all you're doing is you're measuring the length of A to B. Now I want to see what would happen if we projected that same length of move off of the C leg, the local high. We drag it over. There's your target, right? And you can see how this looks like a channel, because that's effectively that's what it is. Link did something very similar. So that was another easy one. And the targets on that are very simple. You're looking for the 382, the 0.5, and the 0.618 and 65. After that, though, you do start targeting things like the 1618, like 1272, 1618, things like that. So, be careful, because if this breaks through that channel, things could get pretty wild. Now, on a monthly basis, we've been talking about 102.21 quite a bit on the DXY. However, we've had these two breakers marked for quite some time. And what we've been saying is, when do we deem we have acceptance into the 12M level here, which is our overall range from years prior? Well, you need to see monthly closures below these breakers. And if you do, you're going to see a larger move down in like the 96.5 and 96 area. However, you got the reversal pattern. So you have to be, regardless of what you're reading about the dollar and bricks and all that other garbage, this doesn't matter. The setup here is a long. The only thing you can do is long. And even when you came down here, really, really nice. You swung fail this local low right here from the prior day on July 13th. Friday came in, boom, hammer candle, held the low, which is where your stop loss would go. And you're just targeting the EQ of the channel and then the channel high and or your fibs, right? Now, if you break out of this, I'm looking for 105.788 next. And that's really a big, big level. That is ignoring the yearly pivot, which could be resistance, don't get me wrong. But I would be looking upwards to this 6-month SFP as a retest, as that is our key level. We are still yet to close a 6-month candle above this level here locally. So you can see we put in the high the first 6 months of January or into January. And then you've got the second half of 2022. You came up, closed below it. You've back tested it, got the rejection. It's just now you're at that monthly support. So if you start living above 105.788, on like material closing basis, I'm really realistically just looking for it to try to make a leg up into like, 106 and 107. I'm not looking for new highs on the dollar as of right now. This is a pretty nasty rejection. And I would actually deem this as probably going to play out over time into this area of the chart. And I do have a fun folder for this one as well. And I believe it was, where is the top on this one? We had a top, which was a bearish bat pattern, which hopefully I didn't delete it. But if I did, nope, there it is right here. And we called this out on debate as well. And technically, the target on this is going to be the 50% mark and the B leg eventually, right? So you have a really large reversal pattern. And looking for the 50% mark puts you somewhere in like the low 90s, So it is one of those things where I think that the top is likely in, but you have to remember this pattern took 20 years to play out. This is a really long pattern, and it can continue to take a long time. So it could be, a while before we break through here and hit some of these targets. But that's okay if it takes time. You just have to be patient. But the one thing I wanted to say about this specifically was because, a lot of people want to correlation trade Bitcoin and the dollar. They think that's the way to go. And I've always said that you shouldn't be a correlation trader, because sometimes correlations are really good and you can do that. But sometimes it's like, like yesterday during that dump, this thing was actually getting rejected up here. If you go back to like the 4 hour, you can see it was getting a mild rejection, so Bitcoin, yeah, I'm not going to like day trade the correlation. Now, if you wanted to look at this and say Bitcoin put in its top on the 14th, this put in its bottom on the 13th, this has been trending up while Bitcoin's been trending down. That's how you want to do that. So we've spotted a trend reversal, and we spotted a trend reversal pattern on Bitcoin. If you recall, it was the shark pattern at the high. Both came in at the same time. This is why you go risk off in that area. And I kind of tried to say that. I didn't want to tell people, open shorts by any means. But what I did tell them is that, well, I would be deleveraging and getting risk out of the market, because to me, it looks like there's a reversal taking place. And that's not financial advice, and I don't want it to be, but that's just, the nature of what we were watching. Going to the daily, I am curious of pulling the 1618 on this actually. And we need the 1272. These are the two major levels. Yeah, the 1272 would realistically be the next target for something like this, given that it is a 786 ABCD, meaning that if you're looking for a 1272 at D, it's because you have a 786 for C. So you're looking for that complementary. If this was a 618 and it was down here, we'd actually be looking for a further expansion of a 1618. So in this case, we're looking for 107.598 and the 6M1. So we are still looking for that, as long as this doesn't dump back down and start giving up these breaker levels. If this breaks out, I'm looking for 105, and then I'm realistically looking for 107.645 or 107.598, however you want to look at it. And those would be my next targets. Main reason being is they're untapped averages from prior sessions, and we know that these like to fill. It's just a matter of timing when they're going to sometimes. So, yeah. I don't chart on Coinbase. Not my thing. I don't use Coinbase. I actually hate Coinbase, so I refuse to give them any of my business. People can think whatever they want on that. I don't deal with people that try to hold people's money like that. I refuse to. So Coinbase can suck it. That's all I have to say about that. I don't have anything else on the SPX or the DXY. Harmonics kind of led the way here. And I don't know of a bat harmonic that I've seen on Bybit on the daily, because we took the overall low right here. So I imagine you were looking at something there. I imagine you were probably looking at this, and I don't know what Coinbase's low is. I don't know if it went as low as Bybit. I imagine it didn't. You're probably looking for something like this, because that's 0.5, and this would actually be a bat if, on at least on this one, it would be a bat if it stopped like right. Well, technically it can go lower, but yeah, the 2618 would be there. I mean, it could be. And the only thing I'll say about that is, if you recall, the Q3 pivot is right here. Okay. Q3 pivot is 28,893, right? And when we were just looking at that, we were looking at it like so. It's a very ugly bat. I don't like the timing of the ABC, to be honest with you, but that doesn't matter. And let's go down. Like, let's say that you did get a bat right here into the 886 and the 2618, all that stuff. There is your B leg. This would be your next target. If you're trading that harmonic setup and you think it's valid, your stop loss now goes below X because, you know, in theory, I assume Coinbase didn't take this low. I'm not going to look at USDT because I don't trade it. And this isn't a request show, really. I've had people that want to do it before. They've tipped, and I'll do it because that's rude not to, but I'm not going to spend all day just charting random shit for people because it's a waste of all of our time. Most people are looking for gimmies in that regard, and I don't have time for that. I'm too old not to be rude, but this would be your target, right? If you're trading this, the quarter 3 pivot is still your target, and it would also be your B leg in that scenario. I would assume that's what you're looking at. That's the only valid one I would see, and that's only if on that exchange you didn't take this low. Now, in terms of that quarter 3 pivot and that B leg in that instance being important, you're going to want to go to your quarterly chart, and I believe it is either quarter 1 or quarter 2. I believe it's quarter 2 here. Maybe it's not. Maybe it was the bi-yearly. I know I've got a... There we go. It would also get you out of your quarterly ranges here, right? So, and your 6-month range. So you'd be living back above the value area high of these closed sessions, you know, like the quarter 2 would be basically getting all the way up there, but then quarter 1, and let's look at quarter 3 as well. There it is. Quarter 3 is actually the value area low. So getting back into your own quarter at that time. So when we looked at this as the B leg potentially, this is also your quarterly point of control, right? Developing 6 weeks in, this is our point of control area and our B leg and the value area low. So we can probably actually just get rid of some of these historicals. We don't need them at this time. We'll use the current. And there you go. So if you really want to be bullish on this, it starts at 27. However, got to get back above this area of the chart. And if so, I think that you would almost borderline be targeting a full rotation into this, what I call, it's a naked caveman pivot that's been left over for some time at 30,596. It also takes out all of these highs. Everyone that's in this trade gets wrecked. And that's the super bullish case, you know, and at that time, I'm not really even looking for a new high, but knowing that on Bybit, this is also my overall gold pocket at that pivot, right? So this is my golden pocket right here. If we reach this area, I'd be very interested to trade this region of the chart. That's a big if as of right now. You know, we gotta see what's going to materialize. Got to watch the April low, which is right here, 26,925. Call it 27K. Start holding that as support. You're also holding on to these yearly and semi-yearly pivots. We target the quarter 3 pivot, and you can, you know, call the bat valid and start targeting that B leg as well. All right, done deal. Yeah, I don't trade any. I don't give any credence to Elliott Wave. I'm going to be kind of rude about it. Yeah, so I think Elliott Wave is complete bogus. So when I see expanded flats and stuff, like, I've been doing this for a long time, and most of those guys are full of shit, and they're only right when they're in a trend. You know, they have to spot the trend, otherwise they don't know what they're doing. I wouldn't day trade those guys. Harmonics are a different story. Those are based on statistics, whereas Elliott Wave doesn't really have any statistical backing, unfortunately. That's it, guys. If you haven't smashed the like, smash it. It was a long one, an hour long. I'm going to finish up the thumbnail for some of the altcoins, and we're going to dive into that next and go from there. I know Max is ready to get off here. He's probably glazed over there. Got the look of boredom. He changed his shirt. He's ready to be slim and fast and, you know, put the foundation on his back, so to speak.
And build up everyone's backs. I'm doing it for everyone. Everyone back pain.
Yep, he's doing it for all of you. Anyone over 5'6", he's doing it for you guys. If you're under 5'6", well, I'm sorry.
Yeah, you've got no back.
Yeah, you guys can get your own back. All right, guys, I'm going to hop off here. We're going to end the stream. Thank you guys for watching. If you're watching it back and you have comments or questions, all you got to do is comment down below, and we'll go from there.